And let's get to Metro Brands, because that was the company on our radar. It was a soft quarter for them. They barely saw 6% growth on the top line, and the profit has declined. The margins have contracted. Nissan Joseph, the Chief Executive Officer at Metro Brands, joins in now to discuss their Q3 performance. Nissan, thanks a lot for joining in. I wanted to first start by asking you about the sentiment, because clearly across the board, consumer sentiment has been slightly on the weaker side. But can you quantify that for us? And what is your expectation as we move into FY25?
Sure. Good morning, Sonia, and thank you for having me. When we look at last quarter, it's really about tough comparables as opposed to economic headwinds, right? So last year, we had the COVID bump that helped all our sales across retail. And then now this year, we're going against those numbers. Having said that, though, when you look at our profitability coming in at over 17%, Pat, and I'm talking standalone numbers, you look at our year-to-date growth of being 10% over a very strong base. I'm quite pleased with the results we've come out with. And speaking to your other question, we are not seeing any economic headwinds. We're seeing, of course, timing headwinds, demand offsets from COVID bumps, but we're not seeing any economic headwinds that indicate to us that there's a softening in the consumer.
Okay. Will you grow at that 20% kind of compounded level, Nissan? I mean, brokers like Motilal, etc., believe that you can. Can you give us that confidence?
So I think if you look at us historically, we've grown at about an 18% CAGR, and that's a number we stay consistent and confident with. Some years you're going to blip up, some years you're going to blip down. Last year was a big blip up, as we all know. And this year, when we go against that, there's going to be a little bit of going back towards it, getting back towards the 18% number. But, overall, when I look at the long-term runway of growth for Metro Brands, I feel very confident that we'll be able to achieve that 18% CAGR over a long, extended period of time, despite a few blips here and there.
And will you be able to hold on to margins of 30% plus at the EBITDA level?
Yeah, we've always guided to that margin level. We've guided that our EBITDA would be north of 30%. And last quarter was no exception. We came in at an EBITDA of 33%, which is a very, very healthy EBITDA for a retailer. I think a lot of people take the eyes off of that for a second when there's a comparable number that goes against last year that was extraordinary. But if you look at it as a standalone number for this quarter, it was outstanding. You're talking about 17% PAT, you're talking about a 33% EBITDA, you're talking about our gross margins maintaining at 60% for the product level, which shows there's not a demand weakening because that would erode your prices immediately.
On Cravatex particularly, which is Fila, you did mention last time around, Nissan, that it could be a drag on profitability for a while. How long before you see a turnaround there, and what is the expectation as we move along?
Yeah, it's not could be a drag, it is a drag on profitability, but it's really an investment that we're making into Fila, right? We anticipate that drag to continue through this existing quarter, at which time we'll start to level off and won't be a drag on us. It may not be accretive to us right away, but it won't be a drag on us. And next year is really a year of resetting the brand in India. We see a lot of positive things coming out of Fila Global that we'll be able to piggyback with and create a demand for the product as we start repositioning it in this coming fiscal year.
So when you say level off, Nissan, could you put some numbers to it? I mean, maybe not this year, but say FY25, what will it look like?
Yeah, I think towards the end of FY25, we would start to be non-dilutive to us. FY26, we can see it being accretive to our numbers.
The implementation of the BIS standards for footwear has been deferred to 1st of January. So in the coming quarter, will there be any impact on your financials?
Yeah, there's actually two dates that are critical with BIS. One is the Jan 1st that we just finished, where some of the implementation started to happen. And there's another date of July 31st, where other pieces of footwear start to kick in and need the BIS certification to be legally sold. We think this is a very exciting program for India. I think it needs to be phased in to a certain degree because Indian manufacturing has not scaled up yet. So there's significant investments in PLIs towards it. As that happens, I think it's a good thing for us. What we have done here at Metro Brands is we forward bought inventory last year to ensure that we have the inventory to take us through any blips that come as BIS is implemented. But it's really a phased implementation. And with those phasings also, because These things don't have a history of how it was done in the footwear business. It's the first time India is doing it. So we will have some blips and bumps along the way, but overall, we think it's fantastic for Indian manufacturing.
Okay, you started by saying you don't see any indications of consumer demand softening. Would that mean that you're not going to go easy on your store openings? Because you did mention that you're going to open 200 stores in the next 2 years. Are you on track to doing that? And how are you seeing the e-commerce, side of the business? Do you see that plateauing a bit?
Yeah, so there's a couple of questions there. Let me take the first one. We guided that we would open over 100 stores a year for the next 2 years. This year, we've already opened 85 stores, which puts us well on pace to exceed 100 by the time we get to the end of this fiscal year. We don't see a softening there, Sonia. What we do see is that, the retail euphoria of last year caused a lot of demand on real estate, that people were crazy to open up stores and, the euphoric nature of retail back last year. That has somewhat subdued down. And despite that euphoria of people opening up a lot of stores, we were able to keep on track with our guidance. And we don't see that slowing down. And mind you, that store opening does not include any openings we would have for Fila and definitely not for Foot Locker, which, as you know, we just signed on recently.
What about just one number, the same store sales growth? What was it in Q3 for 9 months and even going ahead? Is there any guidance that any number we could work with?
Yeah, we don't provide guidance on same-store sales growth. We never have, and that's not somewhere we do right now. But overall, we think when the timing trend normalizes, we should be at inflation plus 200 to 300 bips to it.
Okay, that's been your stated guidance. I remember even from the last conversation. Thank you very much for joining in and wish you all the very best. That's Metro Brands for you, down close to about 4%. The company is confident that margins will sustain above 30%. The stock, though, is a bit subdued.